Okay, folks, welcome back. This is our economic calendar for the coming week. As you can see, Monday is an absence of any real economic drivers. And on Tuesday, London Open for GBP, we have average earning index and Euro medium impact zoo economic sentiment, 8:30 a.m. CPI numbers coming out for the dollar, high impact. On Wednesday, London Open, Euro medium impact German preliminary GDP, 4:30 a.m. London Open GBP CPI numbers and PPI input, medium impact. Thursday, we have several bank holidays there, and London Open, high impact retail sales, 8:30 a.m. High impact core retail sales, Philly Fed manufacturing index, and retail sales for the dollar. On Friday, we have building permits and preliminary consumer sentiment for dollar-based medium impact. All right, so let's move over to the charts. Okay, folks, this is the dollar index. This is our daily chart. And you can see we've been hovering around the area that we've noted for a pullback. I mentioned if we traded down to that level, I'd be taking day trades. And you saw the results of that by way of Twitter. The current market structure that's in place right now still, to me, favors a further decline. We have a volume imbalance, and we have an order block in here that could be traded to a little bit deeper. They may run and take it below here and then maybe pop it up and clear up some of the imbalance. It's here and here. Whether it goes on to make higher highs for the dollar, I don't know that for the time being. I just favor a brief attempt to go down here. Now, if we clear this level here, and this is the equilibrium of this dealing range that we talked about weeks ago, if we trade through that, then it becomes exceedingly bearish. Liquidity below here and the imbalance here. So the BISI would be probably the next target should we get below here. Gun to my head, what am I thinking going into this week? I think that we will probably see much of the same thing for a dollar. Remember, we're in this large trading range. I think we will probably want to go lower, and that'll give rise to euro, dollar, and other foreign currencies, but cable, and we'll talk about that in a moment. So there's really nothing else to talk about relative to the dollar. That's all I'm working with for right now. We're going to segue right into euro pound. I primed you guys to look at this pair relative to the equal highs on the weekly. This is a weekly euro pound chart. This old high, really clean. Market expanded. We did, in fact, get that run. Dropping down into a daily chart, you can see a really nice extension towards the end of the week on Friday. The factors I was looking for, the ones I was siding with, I wanted to see euro dollar rally and cable be consolidated. That was the actual, I guess, the framework that I was wanting to see. We didn't get that. We got the opposite, which would still cause euro pound to rally. Now, it doesn't matter. Some of you guys in here that like to keep score, and I appreciate that. Just know that the focus was this pair, okay? It's not so much that it was euro or cable, the trade. It was this pair. So if we know that the dynamic was one or the other, and I told you I would rather see, personally, to trade euro. I wanted to go long euro, and I still want to go long euro, if we're being honest with each other. But euro pound has reached a minimum threshold for objective. So we got that. So we were able to use intermarket relationships and how they control the board with the crosses. So if you understand euro pound is designed, okay, or engineered, I should say, to go higher or lower. It doesn't have to be just this direction. It's both directions, really. But when it's so clear that they're trying to take a cross to a specific price level, then you know that the two factors that we covered for making this pair go up, for instance, euro pound, for this pair to go up, euro has to be held in consolidation or rally when cable drops or is held in consolidation. And I'll say it in a more concise way. For euro pound to rally, euro rallies, pound stays consolidated. or euro consolidates and pound declines. That's the two facets that make this pair go up. And you would just simply reverse that when you expect it to be going lower. Using that information, we drop down into an hourly chart. Okay, so here's our bullish order block, displacement, fair value gap, price trades down into the fair value gap, expansion on the upside. Even comes back one more time in here, picks up another fair value gap, and extends above the weekly equal highs. Really, really nice pop on the end of the week after a consolidation, winds up and then pops to the upside. Really, really nice to see that. Now let's segue into euro dollar. This framework, and I'm not going to go out to a daily because it's basically what we're looking at here, but I better do it because I know you said, oh, could you just show me the daily chart? So here it is. I think that they still might want to run this buy side liquidity pool, and that would be, I guess, the weekly objective if I were to go long. So I'm looking for this to pan out should there be a long entry, and I don't know if there's going to be one. Let's go back to a 4 hour because it's a little bit cleaner. I know we don't spend a lot of time on 4 hour, but I'm using the 4 hour here and an attempt to be much more refined with the levels, and it shows all of the salient points that I'm going to cover. We still have the bullish breaker in here that has not been traded down into, and we have a sell side liquidity pool resting below this low. I would like to see it trade down there, but it doesn't have to. Now, what would change it? What would be the setup that I would use if it doesn't trade down here? Because if it does trade here and it's in a kill zone, preferably London or New York, then I'll look for that. But if it doesn't do this, if it doesn't trade down into the breaker, because it doesn't have to, if we get a 15-minute rally with a nice clear fair value gap and cable is pausing, okay, it's really important. Cable has to be pausing, not trading higher or lower. It's got to be held in consolidation, and dollar is slipping, as I was mentioning earlier on the daily chart. If I get that with a fair value gap, bullish order block, or if we run a 15-minute sell side liquidity pool on euro, that would be a catalyst inside of New York or London. I would look for that framework to set up a run for low resistance liquidity run for the buy side liquidity pool here, and then up to mean threshold on the bearish order block here. Okay, so that's what I'm specifically waiting for euro. Otherwise, I'm not doing anything. I'm not selling it. I'm not trying to go short. I'm not trying to play from here to the breaker. I'm not doing any of that. Okay, I'm basically sticking to what I just outlined here. And we'll see if we get it. If we don't, then I don't care. So cable, moving on into this pair, on Friday, it came out the gate pretty aggressively on the downside. We've had this consolidation in here and then an expansion lower. I did not see this coming, okay, until Friday, and it started just dropping. So there was no visibility on my part. I didn't see it coming, but I can tell you now that it has moved. We can pan out a little bit. And over here, if you look at the British pound futures, go to barchart.com, load up September's delivery contract for British pound, and pull up the weekly chart for that futures market. And you'll see that they're pretty much even in terms of the lows. So this big drop here, October 6th, 2016, and they'll probably refer to it as October 7th because it happened in, all this was Asia. This big flash crash in the pound, that happened in Asia. So it was really a huge repricing lower, clearing out a large liquidity pool on large funds. And then you can see, there you go. I believe that we're probably going to make an attempt to go lower. Does it go this low? That I don't know. But this low here, we're so close to sweeping below that. I'd like to see it leave this candle's low 120.78, okay, 120.75. I'd like to see it open, create a small little gap with that low and whatever the high on Sunday and Monday will be. And then trade back up into it, and then I would look for another sell-off. But I'm anticipating this as a fair value gap forming. It doesn't mean it won't just open up higher and not even provide the gap, or it could gap lower and then there's really a real gap then there. Either way, I'd like to see it work off of this down close candle, the low 120.75. It could spring up to 120.80 institutional. I don't think it's necessary. I think 120.75 would be sufficient, and then that level would be one I'd be interested in looking to see if it lines up with time and price, and we get some kind of supporting evidence in dollar. And now, what would the evidence be for dollar? Dollar has to be held in consolidation, not rallying, not declining, just staying in its small little range where it's been on the daily chart for the last couple of days. Brexit has a lot to do with this pair, and I said that it's going to be heavily manipulated because of that. You guys got a new prime minister over there. All those factors are in play here. So just know that we have a seasonal tendency for this pair that's unfolding. And I know some of you that are in mentorship have contacted me regarding Steve Moore's seasonal tendency service. I personally do not subscribe to it. Now, I do believe he offers the best in terms of seasonal tendencies. I covered the favorite seasonal tendencies in the mentorship. Do you technically need to buy a subscription to his service? No. Is it advantageous for you? I believe it would be. Do you have to do it? No. The things that I have culled from his resources, I've been very candid about and told you that he's the best. These are the things I found useful from it. He doesn't specifically say those things in his service about how I interpret it and how I incorporated it into how I visualize price action. So that part is mine. His graphic depiction of the seasonal tendencies are 100% his, and you should subscribe to them if you want a continued update of those seasonal tendencies. I have a set from the 90s from him, and it really hasn't changed a whole lot, but they do small little variances of the lines, but it's still basically the same seasonal tendency. So that's a testimony to how good his information and his compilation of the data is. It's held up since the 90s, and this was seasonal tendencies that went back 30 years prior to that. These are all the same seasonal tendencies. That's why I'm saying these things repeat over and over and over again. So, I know some of you have just signed up, and some of you older guys and gals that are in the mentorship, you're now going in and looking at that service, or looking at the link, if you will, that was being shared. It was public. Everyone had access to it, but he has since moved it to a paid or premium venture. And, you can't fault him for it. It's his stuff. If he wants to start charging for it, then it is what it is, and you can't complain about it. So, but I do believe he does have the best, and there's no other place or resource to look for seasonal tendencies better than him. All right, so, and again, that website, you can check him out at mrci.com. And I don't really know what those letters mean. I just know off the top of my head that's what the website is you can go to. I do not get any kickbacks if you join. He doesn't even know that I send people to him unless you make it apparent that I have recommended him as a service. So just know that there's no networking on my part. I don't have a partnership with anyone, not with any broker, not with any other organization. It's just me. So if I like something, I'm going to tell you about it. If I don't like something, I'm going to be honest and say I just don't use it unless I don't really have a high opinion of the organization. I feel like they're unworthy of a good balance. Just being civil and saying, okay, yeah, I don't like them, and that would be sufficient. I'll also tell you, like FXCM, I think they're snakes and they should be shut down. I'll be honest with you in every aspect. But as far as seasonal tendencies, a lot of you have emailed me that, and I'm just blanket responding it through the video, so I don't go back and answer all those emails individually because I have a lot of them. All right, so let's drop into a daily. So from that weekly perspective, we have a huge imbalance here. I don't think we come right back up here and snap in and buy into that. I think we're more likely to decline further and take us back into, let me go back into this weekly chart. And low comes in at 1959. So we almost have 60, so it's 40, 65-ish, 65, maybe 70 pips between where we closed on Friday to a run below the equal lows. Now, the liquidity resting below here is on a fund level. So if they are going to run these levels here, they're not just going to tap the low. They're going to want to sink it a little bit deeper. How much so? We'll have to see when we do our day-to-day updates, our intraday deviations, central bank dealers range, Asian range, flout, and also looking at the overall market structure. But it's pretty safe to assume that we got to run below here coming up. This low, like I said, October 6th was the date it happened in the States. That's how we interpret time. Like, for me, it was still the 6th. But if you look it up on the internet and talk about the flash crash on the British pound, it's usually talked about it as October 7th, 2016, because Asia technically turns over to a new trading day in the Forex realm. But for me, I'm still awake in the 6th. So that's why it's always confusing for me when I'm talking to students all around the world. They're saying, okay, look, I need to know what my kill zone is for my time frame because this, no, I'm not going to do that for you. Okay, the reason why I told you if you set a clock to New York time, every time I give you a time in my teachings, it's all New York based. So then you do the conversion. Because I'm saving myself a great deal of confusion, headache, because I have messed people up in the past telling them the wrong times, trying to convert it in a conversation through a text or an email. It's very easy to convert it if you just know what the local time in New York is and look at your broker's feed, okay, and then figure out where I am relative to your feed or your broker. And then you can completely transpose that information into your local time frame and apply it to whatever broker you're using. All right, so we had a really nice expansion on the downside here. We're watching it right below these equal lows and see if anything pans out. I want to look at an hourly chart and pull up. And that it was the 30-minute. Yep, 30-minute chart. We had a fair value gap in here. Trade up into a bearish order block. That was really nice on Friday. That occurred on the London close. Okay, so in your notes, this is what you do. I didn't trade the British pound. Okay, I get a lot of questions. What do I mean when I tweet go back into your charts and annotate them so that way it's useful to you? My eye, just as well as yours would, go right to this area here. Okay, and then I break that down. I annotate the low, the time, 10:30. So it's a little before New York open. It's during London lunch. And then we have run up into that bearish order block. I would note the time, which is London close, and remind you all that London close in a trending environment tends to be really good patterns to enter, or times of the day to enter in an existing trend. So we've had a really nice run off here earlier in the day on the 9th of August, which is uncharacteristic for me personally. And that's why I'm saying that I probably would have been a little reluctant to take this one because it's so long in the tooth for the week. It's late. It's London close on a Friday. If you're a scalper and you're not really worried about it, you're just trying to take some pips and run, then there wouldn't be nothing wrong with taking the short here trying to capture something here, and then maybe leaving a piece over the weekend if you feel so inclined to do so. I don't feel inclined to do that, okay, because there's a lot of things that are happening over the weekend. And you don't know what's going to happen, especially over in Brexit stuff, because I don't know. It's all learning for me. But you would just draw up your chart and put all your, and I'm not going to do it here because I'm going to leave that for you to do. But this would be the only real point of interest for me for Friday. I wouldn't really be so interested in anything in the London session because it's rather sloppy in my opinion, but really, really clear, but really nice for the London close continuation. Now, in your notes, London close in existing higher time frame low resistance liquidity runs, trends, or momentum, intermediate term swings, however way you want to put that on your chart to annotate that you're focusing on the higher time frame order flow. London close will many times offer ideal entry points for continuing in that specific direction. Now for homework, you want to go back and look at those and study that time of day, generally between 10 o'clock in the morning and noon time, New York local time. That's your London close time window. So if you have an existing higher time frame momentum with order flow going direction lower, study all your favorite pairs and look for setups that occur during that period of time. And you'll see there's a lot of those setups that occur because a lot of algorithmic trend following models use that protocol. They wait for the end of the day. They use the London close of everyone squaring up their positions because it's the end of the day. There's a lot of day trading in currencies. That liquidity that's offered when they're squaring their intraday positions, long-term algorithmic models will pair up orders at that specific time. Okay, so I'm kind of like giving you a heads up about some of the things that we will talk about in depth in 2020. But in terms of studying and for homework, you want to look at it in that respect and see how many times it offers really just beautiful setups. And they're setups that happen where like you create the swing high and you don't get that London whip up and clear it out. It just keeps on going. That's what I'm referring to as a continuation on London close entries. Same thing is said when it's bullish. Okay, so study both directions in your favorite pairs. And the last bit of business here is our gold. We had I mentioned rather on Wednesday that we would see a continuation into the fair value gap on gold. And I don't want to go to the forum because it's going to create all kinds of confusion for me, and I'll lose sight of what I want to say now. But pull the chart off from the forum where I talked about where the fair value gap was on gold. It was a SIBI. Sell side imbalance, buy side inefficiency. The range was defined by 14.95 as the low end and 15.40 was the high end. If we know that there's a willingness to want to run up to that level, you want to highlight that 15.40 as a high end because this is how much it could run up to and fill in. And in the low end, $14.95. Okay, so that's the area at which we know that the draw on liquidity is going to be, and I'll change the colors that way we keep things distinguished. And up to here. So these are draws on liquidity or unrealized objectives. So you already know where I'm going with this, don't you? So at this point here, when price was trading at 14.74 on the close, I posted a chart to say that we have room for gold to rally still. Okay, and I outlined the weekly SIBI, sell side imbalance, buy side inefficiency. We know that it can reach up to this level here. Now, if it's going to go to $14.95, and there's a lot of range above that, which would be between these two red lines here, here, and here. This is that range that I shaded on the weekly chart of gold and posted it on the forum. So this is the range where we'd anticipate price reaching up into. So if we know that $14.95 is the low end of that range that it can seek to rebalance, what level would be above $14.95 that we would be really interested in? The big figure 1500. 1500 is here. Okay, so now we can take the old previous daily high, which is what we're seeing here. Okay, 1474 3/4, which is essentially what? 1475. That was our level. We had a fair value gap, volume imbalance, trades down into it, previous day's high, order block if you go into a lower time frame, and it rallies up. This level here, this level here, this level here is directly related to this 1500 and the 1475 level. All I did was took a fib and drew it on from that level to 1500. Here's the equilibrium. I drew a horizontal line there. Then from that point I have a new area where I can get a range. So we have the equilibrium level up to the 1500. Here's that equilibrium price point. That's that level there. And the same thing is said down here. Okay. Now this will be very reminiscent of my very old video, Trader's Trinity. The application of Trader's Trinity evolved into the application of grading price swings. Now, for some of you cats that are in here, okay, you're going to think of this as quarters theory. Quarters theory is actually a relatively new idea based on Fibonacci. Now, it's utilized on a range that has already traded. What I'm teaching you is an unrealized dealing range. There's a complete difference to that. There's a huge stark contrast between that. I'm projecting these levels in the future. Okay? Quarters theory, a lot of my trolls say, oh, you know, because they get a hold of a hand-me-down video someone's shared or whatever, because I kicked them out of the mentorship. They think they'd figured out everything, and then I'm just renaming things. They have no idea what they're talking about. So for your own benefit, go and do a little bit of research on quarters theory, and you'll see what I'm doing is completely different. It's revolutionary, actually, because it's projecting the very levels where the formation of these setups, order blocks, PD arrays are going to take price to a specific target. We're not dealing with zones. We're dealing specifically with a real price level, and then we calibrate that level. What do I mean by that? Well, this is our first grade. This is the 25. This is the 50, the 75, and then terminus. Okay, so this is our first run into that level. Hits the order block on a lower time frame, which is occurring in here, and it's in the previous. Let me just show it to you, because here's the order block. We trade down into it, and it's the previous day's high. Fair value gap, imbalance, expansion. It trades up to the first grade. Does it offer resistance? No. Slices right on through, goes to the 50, or the second grade of the price swing. What price swing are we talking about? It's reaching for 1500. Why would it reach for 1500? Because if the range on the low end of that weekly fair value gap on gold is 1495, shouldn't we have the line there? No, because we're projecting a run on liquidity. That's the level, but the concept of the SIBI and the BISI is it's going to seek liquidity inside of that range or gap. So now we have to specifically deal with the actual levels, not just a range indiscriminately. So we see price go to the first grade, the second grade, gravitates, and look how it's working that level. Already, look how it's working that level. Based on what I just showed you and also what I taught in the mentorship. And then look what it does. It comes back down, hits the first grade perfectly, trades up, gyrates around the midpoint. What is it doing? It's pairing up orders. The algorithm is holding price in this consolidation. It wants traders to sell. That's why you create these little runs up. They give you dojis. Oh, what's a sell? No, it ain't. Price comes back up. Oh, yeah, okay, now this is resistance, so now we can trust it. Fibonacci retracements. Let's go short and hold it in consolidation, and they're frustrated. And then finally, they crush them by taking out to grade 75. Then trading to our low end of that imbalance on gold, the fair value gap. It trades to that level, taps it, and then whips into it a little bit. Does it get to 1500? No. Big sell-off. They are defending 1500. Resistance is 1500. Go short gold. Go on the forums. You'll see all that stuff. And then price comes down, finds a measure of equilibrium around the 75 grade. Fair value gap here. Expands up. Finds support at the low of that weekly fair value gap on gold. And then price runs up. I'm actually saying weekly fair value gap. It may have been a daily chart for gold, just as a correction. I'm not sure. I don't want to go back and look at it, and it may be seeming very lazy of me, but I'm having a great deal of anxiety saying that weekly chart of gold because it may not be a weekly chart. It may have been a daily chart. But you would still see it on both time frames. I just don't recall if it was a weekly chart that I posted in the forum or if it was a daily chart. Okay, so we whipped through to 1500, and then we had our price run. Okay, so price runs through 1500, comes back down, consolidates around 1500, expands again, rejection block in here. But now here's what I want to kind of like bring out. At every one of these grades, okay, all these levels, you want to be looking for your order blocks to form within 5 pips or 5 points. That's the deviation that's acceptable, okay? Because every broker is going to be slightly different, and we have to compensate for that, and that's why we calibrate. Once we have these levels on our chart, say this is 1487, essentially that could be what? 1485 or 1490. Either one is fine. It doesn't make a difference. So as long as you're looking for order blocks that form around that time period, or not time period, but that price level within 5 pips variance above or below, it's still acceptable. So we are trading in that gray area. Focusing primarily on this specific level in the context that we're looking for price to go higher. We're not anticipating any of these levels to act like pivots and sell off. We're looking for them to accumulate new orders and create an area where the algorithm will give us a signature, something of a PDA, something that's a discount. We want to see that. We have these consecutive down close candles all together make one bearish candle, but would be a bullish order block. Mark comes down, gets that right there, also trades at the low end of that fair value gap on gold, and that's when we get this big price run. I want to talk to you about taking this application of the unrealized dealing range and using it inside of the scope of a fair value gap. So all these levels in here, I'm going to take them off just to keep things clean. And easy to focus on what I'm referring to. So now we've already covered over here what the basis of all that was, and now we're only focusing primarily on these 2 levels here because this is the level at which we could see fill in. If you take a fib, this is your unrealized dealing range in terms of where profits could be had. So this is a range in which we can seek liquidity. It's an unrealized dealing range, but it's being applied to the idea of where in that fair value gap we can reach up into. Again, we're not just indiscriminately saying, okay, this is going to be a supply zone. Okay, not that it would be considered that, but that type of thinking, it leaves you like, what do you do with that? So that's what makes my applications to these analysis concepts more precise, because I'm not wishy-washy. I'm telling you exactly what I'm looking for, and they repeat over and over and over again. Small little variances, but they're generally 98% the same characteristics all the time. So the likelihood of filling this is there. So what we do is we split it, and then we have another range here. Put it right on the equilibrium line. And all I'm doing is measuring 50% of each one of these levels to the next. And a little bit off there. It won't matter 5 pips of variance, Michael. It's good enough for government work. It's good enough for ICT. Alright, so here's what we have. Alright, so now we have these specific price levels. Now, the $14.95 is the low end of that fair value gap. Once it's traded to, it no longer acts as a target because it's already been consumed, but it can act as a level where new trades can form. Hello. 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 See? All this working around that level. See that? And it starts to gravitate around that one. We hit it, bounce. And this is where we're at now. Okay, so once we have these levels determined based on our analysis concepts, knowing that the price should seek liquidity in this fair value gap, the next one would be here. So this is the 25 grade. This is 50 grade, 75 grade, and full terminus up here. This level comes in at 1506 or 1506, as my wife would say. There's no O in letters. There's no letters in the numbers. But if I add 5 points to that level at 1506, okay, what would that be? 1511, right? So you have two levels you can choose from, 1510 or 1515. That's how I gave that number on Twitter. The next level would be interesting on gold would be 1515. Okay, and then if we start to really run, we know that 1540 is where that gap closes up on gold. The next one would be 1517, so that could be what? 1515 again, and 1520. This level is 1528, which can be 1530 or 1525. I would be more inclined to go with 1530 since it's so close. Using that down here, adding it to 1506, I can hear my wife's voice in my head. Don't say oh. 1506, adding 5 points to that would be 1511. So 1510, that would be your easiest level to reach for because you're coming from under it, reaching up into it. Because remember, these are targets on the upside that are unrealized. And the high came in at 1510. There's no other candle that went higher than that one. And there you go. Even this candle here, 1509. So it never went above 1510. It's just consolidated around the levels. There we are. So you can see how it's really, really interesting if you take this information and you practice with it on moves that's already happened. Okay, once you see that, you'll be able to know with confidence how to use it in the future and apply it to other things that I'll talk about in commentary. And eventually when you get to the point where you don't no longer need me talking about what should happen in the marketplace, then you'll know how to do everything without any further insights on my part on it, because it's a rather straightforward approach. It's interesting because it is very precise. It's very specific. You have to understand order flow. You have to understand how to project where the market will go to, and that doesn't usually exist in retail stuff. That's why it hasn't been taught. No one understands it except they've been trained by me. So again, for homework, study quarters theory and then contrast that with what I'm showing you here, because we're projecting inside of BISI and SIBI fair value gaps and balances, and in also calibrating the levels. That it's mine. Okay, just know that it's there. I know there's a few of you in here that you're just keeping your mouth quiet about, but you're all thinking this seems like quarters theory, and it's not quarters theory. Okay, so again, study it. I got books on that stuff, and believe me, it's whatever. I'm not going to spend time beating up another approach, but I shared on Twitter practicing with order flow on the gold market. And I was just using this low resistance liquidity run in here off of a run in here on a 1 minute chart. All I was working was that fractal. That's it. Now, that 1 minute chart was highly responsive at every PD array I outlined before it happened. It worked off of time and price exactly how I noted on the chart. Now, I did it with annotations like this. I'm typing things in, and then I'm moving it around. I can add text to this video, but it's going to be done by way of Cam Studio, and I can't move them around by clicking around, you know, like you see me doing. Everything's being changed on the screen in that short little recording. I was actually sharing that with a relative of mine that I'm teaching how to trade, and he is my nephew, so I'm sending him these things to kind of like instigate his interest, because it's not fully there, and I really want to try to kind of like take him under my wing and keep working with him as a protege. If he wants to do it and stick with it, I'm going to let him into the mentorship because he's my family. I can do anything I want. It's my place, but I want him to trust it. And that was one of those little videos I showed. Look, I can read price, and it doesn't matter if it's on a big chart, like a daily chart, or if it's down to a 1 minute chart or a tick chart. Now, I don't use tick charts, but it's still the same stuff. That video clip, that little purpose, the purpose behind that was there's nothing any different between this run here, looking for a low resistance liquidity run right above here, because these highs were relatively equal to me. That's how I interpret it, because these wicks, they're all going to be different across all brokers. But the liquidity resting above them is going to be layered above this high and this high here. So I know it's up in here somewhere. And 1500 is a very easy number to reach for liquidity, because everyone's going to be working off that big round number 1500. By practicing like that and showing him in that video, for sharing it with you all on Twitter, and for the people that are outside of mentorship, I'm not teaching mentorship content. I'm just proving I understand order flow. Now, it's not a beat my chest and I'm smart and look how cool I am. It's to remind you all that the framework that I gave you for just month 1 content, you can apply that to any time frame. And that same structure I used to frame the setup here for just a couple points of a move, because that's all it is. It's only a couple points. It's not even a lot. But I practice with that on a 1 minute chart when I have time to do so. And if I was teaching like I used to do on a one-on-one basis, I would take people into 1 and 5 minute charts like that just to prove to them that I can see it happening before it happens. So when lay audiences, which is a lot of the Twitter followers, when they see that, it looks like wizardry, because it's hard for them to grasp how it can be that precise and timely. You should be practicing like that in hindsight and in real time if you can do it. By doing that, it increases your tape reading skills, it builds confidence, And it's also not trading. So you're not worried about the profit and loss. You're only focused on the process of following order flow. Every PD array that I teach you, if it's in the chart, you work off of that. And you measure the responsiveness of it. Does it get an immediate response of it? Does it really run? And then over time, you will be able to do what you see me doing in these recordings. Talk about it before it happens. And it seems like I've watched a video, okay, that already happened, and recorded rather, and then put all the annotations on the chart after the fact. And it's nothing like that at all. The students I have in the first group that have done this and practiced and looked at it and really spent time with reading price in real time, if we were all in a room, they would all basically tell you the same thing I'm about to say to you now. I wish I would have spent more time doing that instead of just watching new videos. Now, think about that. A lot of you are in here and you want to just get to the next video. Some of you are trying to pay too fast to get to the videos in the next month. And some of you, because I have help helping me, they processed you faster than they should have. And that's why some of your payments are not processing, because I'm holding you to that standard. We're on an agreement. It's every month, not pay 1 week and in 2 weeks pay another one, and then 2 weeks later pay another one. You know, some of you got, and it's not a lot, it's like 4 or 5 of you got in there like that, but don't be upset because we agreed to this. But instead of being in a rush to get to my next video or the next price action model, which incidentally, price action model number 7, I'll release that to the new charter folks tomorrow by noon, my local time. And we'll also have a amplified supplementary lesson for the charter members on that the last Friday of this month. And then, getting back to what I was saying, instead of rushing to get to that new content, you have so much you should be doing just with month 1 content. There's so much. I only showcase month 1 level content on Twitter. That's it. I don't do anything else but just that. So just know that going into that rushed mindset, that's not what you should be doing. Go slow. Use the content. If you can't keep up with the pace, because every time you pay a new payment, there's a new supply of content and new videos, and some of them are long. And, you know, back then we were doing daily videos, so it feels like I can't keep up. The only thing you have to keep up with is the payment schedule. You're only paying to get your seat secured for a lifetime. You should be studying at your own pace. Some of you are just really feeling like you're missing out, and you're not missing out on anything. You all, charter member and the new members, you're all hearing the same video I'm talking to you right now. There's nothing different happening. The only lessons that the charter members get in addition is that amplified lesson for the first group, and then the new charter members just get the next price action model and the supplementary lesson that comes with it. But they get the same videos you're getting right now. That's the mentorship. You get to sit with me twice a week, and I tell you what I think is going to happen and how to internalize that, and I throw in lessons along the way. When it's applicable to price action, or if there's a lull in price action, then I'll teach something that you should be learning and that will eventually be found in future price action. Don't feel like you have to master everything right away. I'm telling you folks, if you could all just be in the same room with the folks that have been through this and now have found their own niche in it, and they're consistently profitable. I have people like that. Some of them have gone on, they're managing other people's money now. That takes a lot of responsibility and confidence. They don't get there by just worrying about watching the next video. They are the ones that took the information I gave them and listened to the drills. Practice, 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 practice. Do this while you're practicing. Don't over leverage your demo account. Don't put trades on with a live account yet. Don't put the maximum amount of leverage in your trades. You know, low end, the lowest you can possibly use, because you don't want to be worried about the money. You want to be worried about the process of following the procedures. Is IPTA moving price around like we outline it? And if it doesn't hold those characteristics, you need to be questioning whether or not you're supposed to be in that trade or not. And it gives you visibility, it gives you objectivity, and it does not foster these fear and greed emotional responses that anything else would give you. And it's very rewarding as a mentor reading these folks that have gone on and done things like this. But I can tell you, because I'm on the opposite end, I know their stories because they shared with me their struggles. Some of them have been very, I guess, unconvinced when they first went through the mentorship, because it was a lot of information and they felt that it would be easily retained and go right out and start doing whatever they felt they could do with it. They realized they had to put some work into it, like I promised. It requires work. The practice is all part of what you're supposed to be doing. So think about it. You have to do all these videos. You have to study them at your own pace, not the pace of every single month. You're just buying new content. When you go to college and you buy the textbooks, they don't expect you to read the entire textbook before the end of the quarter. They're only teaching you, so many times, just certain chapters out of the book. I want you to read all of the information that I give you. Well, not read it, but watch the videos and study it. But you do so at your own pace. Once you paid for everything, then you got to go back through it all over again anyway once you complete it. So why are you rushing? You're going to have to go through it all over again. This is what I mean by relaxing and enjoying the process. Focus on where you're weak right now. What things you're having problems with. And once you have all the core content, it's all grouped based on swing trading, day trading, scalping, position trading, options trading, commodity trading, stock trading. They're all categorized like that. And they're also categorized based on certain applications of the core content. So you'll be able to go back through, sift through your forum threads and find out where the information is talked about. You should also be recording things in your journal. When I talk about lessons that you felt you're going to need to be revisiting it, you want to talk about that in your journal entries. Record the time in that video, what video it was in, so that way you know, hey, I got to go back and watch this part of that video because it has to do with reclaimed order blocks, okay? Or like we've been talking about just recently, the unrealized dealing range. So I don't put those things in my titles all the time because it's up to you to keep track of all that. I have too many other things to worry about in running this mentorship and teaching it. This is what you have to do. That's all part of the work. And if you're lazy or if you're not organized here, it's really going to be a deterrent on how fast you learn it. And it's not about how fast, but you can really extend your learning curve if you're not organized and if you're not really applying really the things I tell you to do. You have to practice. Even if it's in hindsight, there's no shame in that. That's why I said today on Twitter, I was preaching to two of the members. I have a lady in our group that just recently started. She's in month 3. And she's overwhelmed. She says, there's so much videos, and I'm afraid to pay for the next month because I know you're probably going to have me a whole lot more videos coming. And I was like, well, when month 5 comes, you're really going to be going crazy because it's the biggest month. So you have one more month, then you get a really ton of information in month 5. You're not going to digest all that. She's already fearing something that she doesn't need to fear. You're paying to be part of the community. That's it. Those payments don't stay. I know it feels like it's probably a hardship for some of you, okay? But you're only paying for the 12 months and then charter conversion, and that's it. Then you're here. And then you can learn more stuff. There's a lot more learning to come. But you have to apply your time economically and responsibly while you're going through the content. And I don't have the expectation for all of you. And I said this in the videos, if you listen to them, you're going to have to go back and watch all this stuff again. The guys and gals in the first group, they didn't hear that. They were like, okay, when's your next video going to be posted? It's information overload. Remember, it's just 27 years. So what I'm telling you in this video here is take your time. Use month 1 content. Because everybody that has been consistently profitable with live funds, and I'll say it again, everyone that's been consistently profitable with live funds, that's what your goal is. You don't want to stay in demo, right? That's not what you're thinking you're going to do the rest of your life. You want to get into a live fund trading situation, I'm sure. Every one of my members that have gone on to doing that have done the work of practicing with month one, using that as a basis. That this is what we look for. That's how we structure a chart for a low resistance liquidity run. That is, by definition, your highest probability trade. That's why I gave it to you in month one. So there's no excuses that I wasn't given something that didn't work. I know it works. I do it every single week on Twitter. So these folks that have found their groove, if you will, they all had the same response when I asked them what did they find most helpful getting them to where they're at. Because I was more like the interviewer. You know, what did they find most useful in the content, and what's the things that they're still working on? Some of them came right out in their emails and just told me these things, but the other ones that didn't, I would ask them. And their responses were always the same. They went back through the content again, multiple times, and they did the work that I said. They didn't listen to the first couple times. Like in those recordings, you hear me say, I want you to go through the charts and practice. Most of those individuals in the first group didn't do that. They didn't do it. Some of them just quit the mentorship and went on to do something else and, you know, write bad reviews, or he's just a demo baller trying to, you know, live on other people's money, whatever they were doing. But the folks that listened and applied the things I taught and gave examples of how to do, they are the ones that are doing it with real money right now. There has been 0 consistent profitable traders, 0 in my group, first group or the present one. None of them are consistently profitable that have not done what I just said. Now, if you had not paid attention, you're here to learn how to make money. Let's cut all the crap out of it. That's why you're here. Okay, great. I can show you how to do that, but it requires work on your part. The videos are just illustrations on how to practice and refine the skill set within you. I have the skill set. I'm trying to transpose it to you. The things that I had to do to get it and the things I teach my other students before I even did this mentorship is all explained in these lessons. The folks that don't want to do it, they're lazy, I don't want to do it, this is much harder than I thought. Yeah, we're talking about millions and millions and millions of potential dollars. You think it was going to be easy? I told you it was going to be hard. But none of the folks that are consistently profitable right now complain about it looking backwards and saying it was hard. They felt it was hard. They felt they were sour because they wanted it to be easier. They can reflect on that. They all say the same things. But all of them say, looking backwards now, it wasn't nearly as bad as I thought it was while I was doing it. That sounds like pretty much anything, isn't it? When you hear other people say it in their own words, it's reassuring because it just solidifies the things that I say. Because sometimes I feel like I'm just talking to the wind. Like right now, some of you probably already zoned out. Oh man, he's not talking about order blocks anymore. He's not talking about them unrealized dealing ranges anymore. Let me just grab something to eat and I'll come back when he moves his mouse around again. It's these discussions that make the traders. Nothing else on the chart means more than the mindset, the thing between your ears. If I don't capture that and hold it in the right mindset, you will not learn. You won't. But if you listen and you practice, it won't feel like you're doing much at all in the beginning. You'll feel like you're, I don't really know what I was supposed to do there. I'm fumbling around through the charts. I don't see what he's saying. Right. That's your first couple times. Keep doing it. It's like a bicycle. Keep getting on pedaling. And then suddenly, because you're seeing multiple examples over and over and over again, that's why I share that stuff on Twitter. What do you see? I'm taking the portion of the price movement that I am zeroing in on because I know what it looks like. That's the setup. You need to see that over and over and over again. Once you see it multiple times, your eye will start seeing it in price action amongst all the clutter. by practicing and reading order flow and annotating your chart as it's moving live, it will build such a huge confidence, because eventually, if you can record your screen, it's even better, because you can actually go back and see how you were doing it in the beginning. I think I paid like, I don't think it's like $100 for Cam Studio from techsmith.com. Beautiful software. It's really easy to use to make a recording. Even if you don't do the live recording, you know, if you can have a family member or your spouse run the recording for a specific session, like if you go to work or whatever, or if you're going to go to bed, you know, record the London session and then turn it off when you wake up. Just having that, to be able to watch it live, okay? Well, not live, but as it breathes higher and lower, and watch it as it's doing it, it builds such a great understanding of tape reading, because that's what floor traders used to do. They could internalize what the market was doing while it was gyrating up and down in the open outcry pits. We don't have that type of trading anymore. It's predominantly electronic, but those same theories are transposed into how the algorithm has been developed and built. Now, there's a whole lot more to it than that. It's a very oversimplification on my part to say it like that, but by far and large, it's pretty true. They just lean heavily on specific parameters, as I've taught in the mentorship, the PD arrays, and relative to time and price, and day of the week and calendar events, which we'll talk more about in 2020. But nonetheless, I want to kind of like just remind you that what you're learning, okay, I'm talking to the charter members now, what you're learning is the refinement of core content. That's all we're doing. And some of you have emailed me and said that because I have done this much teaching on the content and haven't really seen any kind of variances or anything like that, it has helped in your understanding. And I'm just telling you this because I know it complements what I just spoke of earlier. It's by repetition. If it's boring, it's good, because that means you know it. You want to be able to look at price action and watch that open, high, low, and close and know it before it forms. Now, saying that in public, okay, it would be like, nobody knows that. You can't talk like that. I do. I show it. Live trading will not be obtainable to you unless you understand tape reading. That part I cannot do for you. I cannot do it in a video, except for me doing it myself. But watching that little clip I showed on Twitter, did you learn anything from it? No. You know everything I showed you in month one. It's there. All the lessons in month one content was utilized in that little tiny little fractal outlining this movement here to here. That's it. Now, to a lay audience, it's crazy. It's incredible how, you know, responsive price was. For those in here that want to run an analysis service, you don't do so by saying, here's a fair value gap, here's a breaker, and here's the break in market structure, because you're just parroting what I teach, and you're really teaching by default. It seems like an easy approach to going out there and making a name for yourself, but really, what are you doing? You're not making a name for yourself. You're just really subconsciously promoting me, because eventually someone's going to know who you are because of what you're saying, and it's going to get back to me, and it just creates static. You want to be original and an air of mystery. So don't talk about anything except for putting horizontal lines on your chart, and you think that the market's going to give a buy signal here, and it may trade up to here, and your stop would be here. Simple sells. My mentorship would be ridiculously 10 times bigger than it is right now if I didn't have so much content. Because it's very intimidating. It's a lot of content. I got an email from a guy the other day. I just got through the 12th month, and you're right. It's a lot of stuff. That's nothing. You ain't even gone into the things we're getting ready to go into in 2020 and fill out the rest of this year. It doesn't stop. It just keeps going on and on and on because I have so much to share. But you don't need anything more than month one content. You don't listen when I say this, but to make money consistently, not being absolutely precise, not finding, all the big mega moves, you don't need all that. Bread and butter, show me how to make money, ICT. I did that in month one. Month one content. That puts you on the ground running. You're making money with that. If you do everything I tell you to do, you're making friggin' money. It's undeniable. It's there. If you want to manage other people's money, I am confident that if you just applied month one content, you could do that. If you want to win trading contests, I'm confident that if you use month one content, you could do that. If you want to grow a small account into a large account using compound interest with sound money management, I'm confident that month one content can do that for you. Now, you will not fully appreciate month one content until you go through all of the core content, all the price action models, and the trading plans when we apply them in 2024, the 12 individual price action models. You will see things that you didn't see or understand about month one content, but it's always been there. It's always been there. But the depth of your understanding will bring it to surface, and you'll be like, oh, that's what's happening. And for those individuals that are consecutively profitable with live funds right now, they have said that they had that epiphany about month one content because they had a greater understanding of the core content and then went back to month one and it clicked. It all happened. But I haven't changed those videos in month one. They're the same videos there all the time. What changed? They put the work in studying and practicing. When I'm not talking to you, what are you doing? You have to practice. Well, how do I balance my life with all my kids and my job? I don't know. Watch my video on 1440 because that's how I do my day. Sometimes I'm really tight with my time. Sometimes things take over another block of time where I had it allocated for something. I have a life. I have a family. Believe me, I have a wife. She calls the shots. So the bottom line is I have to make adjustments just like anybody else. I had kids. I wasn't a best father when I was younger because I was consumed with this. I couldn't let it go. I had to figure this out. So my family life suffered for that, and everyone knows that. But you have to make sacrifices. Some way or shape or form, you're going to have to sacrifice some time to practice doing this because just watching my videos will not do it. It will not do it. People that get their hands on pirated copies of it, they email me all the time. They don't understand something. Well, I'm not going to answer their email because they're not giving me their user number. So if their user number is not matching up to their email or they don't know who, I don't know who they are, I don't answer their questions. But the folks that are in here living with me every single week, now those individuals that are charter members, this is year 3. You think about it. We're going into year 3. We're actually, what's it technically 4, right? Started in August 2016. So 17, 18, yeah, this is the 3rd year of mentoring in this capacity. So they're in their 4th month, the first group. 867 people and like 640 stayed from the first group. And we're way over that now with all the other groups that started behind it. But that original group, there's only 24 that are consistently killing it with live funds, and they all say the same thing. What did they do? They put their sleeves up, they put their nose in the chart, they listened to the video, listened to what I said to do, how to practice, and then went to the charts and studied and studied and studied. They journaled. They took fractals out of the price action and they annotated their chart. By ingraining that in their understanding, boom, now they can look at charts and there it is. Some of them are really show-offs. They'll tell me what's going to happen in other pairs, like, for instance, Aussie dollar and dollar CAD. I don't actively talk about them. So I know that they're doing it on their own, and they're very, very good at it. So what did they do? They took the initiative. They are working. They're doing it. And that's what I'm telling you to do. You're here. You're paying for it. Get what you want from it by practicing and studying. You can't sacrifice your family entirely, but you do have to sacrifice them somewhere. Unfortunately, you're gonna have to. You do it every day when you go to your job. And if some of you have sports things that you go to, some of you are Masons, some of you are, on a sports team, doing other things, or part of a club. Your family's not seeing you during that time too. So you may have to take one of those things out of your schedule and say, I'm going to apply my time to studying this. So it's up to you to decide what you do with it. Like I said, I'm interested in seeing what you do once you arrive at success. I'm interested in what you do once you're there, because I know how it is for everyone while you're going through it, because I've been through it. But you have to grind it out. And it's not easy. It doesn't feel fun. But you have to tell yourself you're enjoying this process because you will get to where you're trying to get to over time. What time, how long, I don't know. Some of them got there faster than the others. And recently, just another came through an email, said, I can honestly tell you I have it now. And it feels awesome. And it's very emotional for me to hear that. And I purposely kept this video to today because, number one, everyone listening to it has already made their payment. So it's not a sales pitch to keep people sweet talked into staying. It's just a constant reminder that you are in boot camp. You're supposed to be sweating. You're supposed to be feeling like you did something hard. That's what this is all about. You're learning the hardest thing in the world. Doctors. I have somebody that works in NASA in here. Okay. These people are smart. They're really, really smart. And they'll tell you that this is very hard because it's about you. The chart's only going to do 4 things: an open, high, low, and close. That's it. That's all it's doing. But how you internalize that, what you see in that, manifests because of the things you're dealing with internally. If you are arrogant, or if you're low self-esteem, or if you're scared, or if you're not organized, you're going to manifest those ideas in the chart. It's like a Rorschach. It's literally what you're going to internalize in that chart because of something you're dealing with internally, psychologically, emotionally. That's the hardest learning curve. You got to get that mastered. Master thyself. You have to control yourself, discipline yourself, doing the same thing over and over and over again. Every one of you have a job of some kind, or had a job if you're not working anymore. And that job, anyone walking off the street just couldn't walk in and probably do your job in 5 minutes. They have to be trained. And the more technical that job is, the more strenuous that job would require of workload on the human body. It would take time for them to gradually get accustomed to that. This is the same thing. You have to apply yourself over and over and over again until it becomes easy. And it will become easy if you keep at it. Don't have to be perfect. You just got to be consistent. And once you're consistent, profitable is the outcome. And if you're consistently profitable, then the sky is the limit. Because then it's just only a matter of compound interest and management of risk. And then working that over a period of time. All of you that are young, this is my last thought before I close this video out. All of you that are young, let me throw you this real quick. I still think that gold can go higher. We have that 540 still as an upside objective. It doesn't need to get to 540, but I still think we're going to go higher ultimately on gold from where we are right now. So that's what I'm watching this week. I didn't want to forget that before I get into this and probably close the video prematurely. But all the young guys, it's not so much the young women, but the young guys, you're all in a hurry to make a lot of money because you feel like you got to have that money right now. Let me tell you something. Having a lot of money has a lot of stress with it. And if you're young, you will not be able to handle it. I couldn't handle it. It changed me into an ugly person. And I'm telling you, it will do it to you too. Now, I know what you're thinking. Well, I'm going to prove ICT wrong. I hope you can, but I'm pretty confident that you won't. One, you're probably not going to make a lot of money right away because you're going to do stupid things because you're young. You don't appreciate the risks that are involved because you're young. You think you have a whole ton of time in front of you, which you do. And if we were to compare my life and where you are at and as a 20-year-old young man, that might be true. But I can tell you, I can do far more than you can do in your next 10 years. I can do that in one. What's the difference? Wisdom. I know where I'm going to mess up. You don't know that yet. Because you don't know that yet, you should not aspire to have a whole lot of money right now. Because new money, that means folks that just acquire money, whether it be by landfall, lottery winning, or inheritance, or by the stock market or markets in general, you don't have the skill sets to manage that type of money. And you wouldn't even know whose hands to put it in to trust it, because you have to hold it somewhere. All those things require trust, and you have to learn a lot of things to acquire trust. And you're going to do things that you're going to self-destruct. You're going to blow yourself out of the water many, many times. And you want to be doing that when you don't have a lot of money. Get the scar tissue on yourself when you're a young person, because all those lessons you'll be able to refer to later on, and they will prevent you from doing it older and when you have a lot more money. But you can't get there quick. You want to get there fast because you see money, you see cars. I can tell you, when I'm done with this video, I'm going to go out and get in a car that costs over $100,000. Now, I can tell you that I drive that car probably twice a week. That's it. I don't drive that car a lot. Everyone else that sees me on the road probably thinks I drive that car all the time. I don't. Why? Because I know every time I take that car out, someone may get into an accident with me. Or, like I just recently had to pay for a tire. It's $1,000 to replace a tire. You know, you think it's easy because you have a whole lot of money. It's not easy because there's all kinds of new incurred risks. So, the young folks that are in here, you got to just relax and let the process happen. If you submit to learning this, and if it takes you 4 years to really understand what you're doing, is that failure? No. It's prolonging success. But it's done so in a manner that allows you to be more equipped to be successful. My initial luck in the market created the mindset that I was better than I really was, and I didn't know anything. Knowing what I know now, I'm confident if I went back to zero, God forbid, in Jesus' name, that I ever go back to being homeless, I'm confident in 12 months I would not need to work again. I would go to work. I would probably do 2 jobs to get what I need to get done. But I would not work a job after 12 months. Now, having a young man's heart and desire to have money, and if you get money, if that money is taken from you while you're still in your 20s, you would not have that same confidence, because you would be ate up with self-defeat, feeling like you got to prove something to everybody, your family, all those things. The same thing I had to go through. And you don't need those things. They're barriers. They're hurdles that you have to cross over, that you purposely place in front of yourself as a young person. The older gentlemen and ladies in the group, you may be in your 30s and 40s and you feel like you're running out of time. And some of you guys are in 50s, 60s. Man, you're really running out of time. Tomorrow's not promised to no one. But you have to occupy. Got to do what you got to do. So again, if it takes you 4 years to know how to do what you're doing, your quality of life can change significantly once you understand what you're doing. Because even if you just replace a major bill, some monthly expense, while you're building wealth, your debt and income ratio changes drastically quick. And when that debt is erased and canceled out, and then you have a more net positive cash flow coming in, and you have more time, it doesn't matter that you don't have millions of dollars in the bank. If you have 24 hours of a day to do whatever you want to do, sleep, go out, exercise, do whatever you want to do, and you're making income whether you're awake, sleeping, working out, or whatever, the quality of life is totally different. Like, you don't need to have those millions of dollars because you're wealthy. That's wealthy. Like, you are living a life that is free of financial burden. But you still have work to do. You still have to take the risks on with these trades. So your mindset has to be equipped to handle and weather the ups and downs when the trade doesn't pan out. Do you lose your mind over it? Do you rush to get back in and make that trade again to recoup that loss? Or you say, you know what, I'm going to cancel my plans tomorrow to trade. I'm going to take a break and I'm going to regroup because I know what I'm looking for should manifest itself. And if it's not there, then I'll take the day off and I'll go spend time with my family and whatever. As a young man, you won't think that. And as a middle-aged man going through a middle-age crisis like I did, I was 30-some years old, went out and bought a motorcycle, should have never bought. I endured all those things. But I did so while I had a lot of money. And we will always make poor choices. The older we are, the more equipped we are because of scar tissue, the painful lessons we learn. Those are the ones that we use to lean on to tell us it's probably not worth the risk. Because the younger folk right now, just like I was a cowboy. I wasn't worried about losing. I didn't think I was going to lose. And as a young person, you focus primarily on the positive, which is great, but you believe it is going to be happening for you all the time, and the negative can't happen to you. Whereas the older folks, we tend to think there's risk, and I can't assume that measure of risk right now. So it's a paradigm shift that takes place. So the folks that are younger in here, under 30, you have such an advantage because you can really allow yourself to grow into a mindset that would promote legacy wealth. And you could be teaching the folks that are in your family how to acquire wealth and build it up over time too. So that way they don't make the same mistakes I'm trying to keep you from making. So hopefully you found all this insightful and beneficial to some degree. This is a reminder, I think, that gold can continuously go higher a little bit more. Euro, buy some liquidity pool. I think that's going to be my objective for the week if I can get a buy signal on it. I already covered all that. And British pound, I think we're going to see continued erosion on that until we get through here. And this, I'm not so convinced about that. That just seems like an extremely long wick. And if you look at the futures contract, like I mentioned, September delivery contract on British pound, you'll see that it is relatively equal lows in here, not this. Okay, so how we trade below here, we'll have to see that this week. And until then, I wish you good luck and good trading.